Good morning, ladies and gentlemen, and welcome to the show. Glad to have you guys here on this Tuesday, the 27th of July, 2021. Thank you for tuning in. I seen on the news this morning in Germany, there's been a big explosion I guess one of these places where Bayer. You ever heard of Bayer? They make aspirins and stuff. Well, it looked like a mushroom cloud. And it was shaking people's houses like a long distance away, and people were ordered to stay inside and everything else. And just an enormous chemical explosion. Big clouds going up into the air. Really, it made a mushroom cloud. So that's what's going on in Germany. Now, in China right now, they're having trouble in their bond markets and in their stock markets and stuff. Things are turbulent in China, and that turbulence, I think, is somewhat extending over. We got a little drop in the markets today, but it's not much. More or less just a fluctuation. Now I'll tell you what, Bitcoin. Bitcoin's bounced back, and there's talk and there's everything. There's so much drama behind Bitcoin. Ever since its inception, I can't tell you how many times I've been through the drama. Of things like Mount Gox, and everything. If you guys been through it and over the years, but Bitcoin's trying to do something. And it's been trying to do that same something ever since it was released. And that's become massive. Well, it's coming off a long way toward that goal of becoming massive. And it doesn't really represent a threat to the existing financial system that's existing. Because Bitcoin is more like gold. Gold's out there too, and it doesn't really represent a threat. Gold's a much larger. Gold represents about an $8 trillion industry, and Bitcoin is under $1 trillion, so Bitcoin is relatively small in comparison to the gold, but it's in that same slot Bitcoin's fitting in. It's not trying to compete with the US dollar. But there are some of these currencies out there, these digital currencies, that are direct competition. And one of them is these stable coins. It's called stable coins. Tether being the most notable of the stable coins. And to me, it's just obvious that the government's going to come down with a heavy hand on competition to the US dollar. And that's what these are. These stable coins. So, I'm going to tell you guys straight up front. If you are into cryptocurrencies and stuff, the tendency is, when you're nervous that the price might go down, say you're in Bitcoin or one of these others, cryptocurrency, nervous that the price might go down. And so what you do is you hedge off into these stable coins. You better be careful, because these suits that are coming against them by the U.S., because they're in direct competition with the U.S. dollar, these stable coins. They represent dollars. They peg their stable coins to the dollar. So this is why people try to hedge off. Anyway, listen, guys, we got to get right in there and take a look at the markets now. So let's open up the charts right here and take a look at what's going on. Okay, silver price today. It's in the middle of a smackdown right now. We're looking at 24.68. It's down 48 cents on the day, which is an unusually large drop. Now, it looks like it's starting to bounce right now. But, yeah, okay. We're looking at the bounce right now, but then it's starting to move back down again. It's absolutely ridiculous the way they're able to use the paper to short out the real physical metal, when the real physical metal is in such short supply worldwide. Looking off into the future, there's a time coming where, see, you have to understand the fundamentals of this industry. And silver is just not, I'm talking about real physical silver. I'm not talking about this paper derivatives product of silver. I'm talking about real physical silver. They've went through and they've scoured the earth for it. What happened was we went through a period or an age where people used to mine silver and gold with a pick and a shovel and a mule. And, you know, you ever seen these old things about a mine? You know, that's what mines used to be, like back in the 1800s. All of a sudden, we went through the Industrial Revolution. They knew where the silver was on Earth. They already knew where it was, you know, most of the silver on Earth. But it was a matter of getting it out of the ground. So we went through this Industrial Revolution, and they invented these big steam machines and steam plows and everything else. Then diesel come along, and this allowed them to strip the silver out of the ground much, much faster. Well, basically, what they've done is they've went across through the whole earth and they've searched for silver deposits everywhere and gold deposits. And they've been in there stripping them out. That's all the easy stuff to get. The better grade ore, that's what they call the big rocks when they dig it out of the ground. And it's got silver in it. It's called ore. What's happening is they grade that ore. They go down and they take a look and they say, well, so many ounces of silver are coming out of this ore. Say, you know, and then they grade it at a certain grade. Like that's grade A ore. It's the best stuff. It's got high amounts of the precious metals inside the rocks. They went through all the best grade ore. Now ore grades are diminishing worldwide. There's no way that they're going to be able to change this. This is a fact. So it's going to take more ore. In other words, they got to dig more of this rocks out of the ground and crush them and pulverize them and get the silver out. They got to use more. They got to dig out more in order to get the same amount of silver. And this diminishment in the ore grades is going to continue into the foreseeable future because there's not unlimited supplies of precious metals in the ground on Earth. It's limited. And as they dig it more and more of it out, it gets harder and harder to get more. It's a never-ending thing, and it costs more fuel and everything else to get it. And so, obviously, when we see prices falling on something like that, you got to say to yourself, this is being manipulated to the downside. We know the players, we know who's doing it, but still they continue to do it. As ore grades fall off, in other words, the more work it takes to get more silver, the price is going lower, and as demand is higher, the price is going lower. What in the heck's going on here? Well, they're using paper as a derivatives product to lower the price. It's totally unfair and everything else, but sooner or later, this is going to break free, and it's going to break free in a monster of a way. But it gets sickening after a while because they're able to keep doing this for such extended periods of time. Like they're able, far longer than we could ever imagine, they're able to continue to keep suppressing the price of precious metals. And for precious metal investors, after time goes by, this gets almost sickening to watch. You know? Let's take a look at cryptocurrencies today. 1,512. Bitcoin is on its mission. Been on its mission ever since it was first started. It wants to become absolutely huge. Too big to fail within the financial system. But what about these other cryptocurrencies like Tether? Well, they've got this lawsuits against Tether right now. They're pressing charges evidently against them. But it's a 61 billion, almost 62 billion dollar industry. Tether's become. So it's big. So yeah, it could affect the price of the other cryptocurrencies if something big happens with Tether. But will it kill the other cryptocurrencies? I think not. Let's take a look at the Dow Jones Industrial Average today. It's down 158 points at 34,985. Just can't seem to get off of that 34 number. It's like it's stuck in a slot, the markets. Yeah, it touched 35, but now it's back down to 34.9 again. My big question mark is, does the market have enough steam to keep off a market crash until January? That's the big question. Can it continue to maintain these overheated values, and maybe even move a little bit higher, maybe move up to 35 or 36,000 between now and January? Can it do that? Or will it fall off 20% or even 30% between now and January? Let's take a look now at the crude oil. The crude oil's at 72.04. They're not going to let that market fall too far before they'll rush back in with some sort of support. That's going to be the last straw for our inflationary scenario. And that's what's coming. Okay, so crude oil's at 72.04. It's up 13 cents on the day. Now we're going to take a look at the move index. It's getting up a little bit too high for my liking. You know, it starts to get up like over 80. It starts to head toward 100. That indicates there's instability in the credit markets. And we're seeing 69.03, and this is the highest I've seen it in a while. And it's moving higher, you know. It's up today. It's up 22%, I guess, is it today? It's up 12.7 points today. And it's at 69.03. So that's getting kind of toasty high, guys. Bonds today. We're seeing movement in the bonds. The yields are falling today. We're looking at a 10-year at 1.24. It's fell 3.5 basis points. And we're looking at a U.S. 30-year at 1.89. It's fell 2.9 basis points. That's awful low for 30 years. Only 1.89%. You know? Your inflation is triple that. So that means it's a guaranteed loss if on the your interest rate on your bonds, a guaranteed loss. Let's take a look at the U.S. dollar index today, 92.54, and the dollar index is falling. You know, I'm going to tell you guys something before I go. Gold and Bitcoin, they're both trying to get that same position or same slot within the financial system. They're actually competition to one another. They've become, quite recently, they've become competition to each other. I'm going to tell you guys what. We're coming up to a time where I think that it's a no-brainer. The financial system, when it really starts to get in trouble, they're not going to run to Bitcoin. They're going to run to gold. Yeah, but there's a big caveat to that. They're not going to want paper gold. They're going to want the real thing. And they're going to want to allocate it. It's going to be allocated positions of real gold. I think what's going to happen is there's so much money been created out there. Massive amounts of money. That when that time comes, when they really get frightened and they run to gold, and I think that's the one thing they're going to run. They're not going to run to silver. They're not going to run to anything else. They're going to run to gold. The gold's going to disappear and you're not going to be able to buy it. They're going to clean it out. I mean, clean it out. And, you know, I think then what's going to happen is there's going to be so much money on the sidelines left over. And when the gold's all going to be gone, you're not going to be able to buy it. Then that spillover effect is going to go into Bitcoin specifically. And I think that spillover effect is going to be massive. So I think Bitcoin is going to attain ultimately, and because it's not really a threat to the financial system as such. It's only capable of like 3 transactions a second. and to be a threat would have to have more capability for being able to become a currency or whatever. It's not. It's like gold. It's something that people store away as a store of value. And so Bitcoin could actually, at a certain point in time, and it could do this very quickly when the big run comes on precious metals, and I'm expecting a monster of a run to come. You guys are saying, hey, when's the run coming, Glenn? The run is coming after we have a crash in the markets, and the Fed comes in to restore everything, restore the balance. Then the run's going to come after that. And when that big run comes, they could take and run gold up the flag post first, and then they're going to run into Bitcoin, I think, and they're going to run it up. And Bitcoin is going to then become too big to fail. It's going to become so big within the financial system that it can't fail any longer. And so it'll become a permanent part then of the financial system. And what part of the financial system it's going to be very similar to gold. In fact, I think the two of them are going to become interchangeable. So it's going to be like digital gold. So you'll still have gold and you'll have Bitcoin. I think that's where it's going to go. I'll tell you guys. Ultimately, is I think gold and Bitcoin are going to be side by side as the real strength behind the world's financial system. And I think both of them are going to be worth a heck of a lot more than they're worth right now. Their value of both of them is going to be exceedingly high. So ultimately, I think in the end, it's not going to really matter that much whether you guys have stacked gold or you've hodled crypto Bitcoin. But I at this stage in the game, I think that I would very much avoid these alternative coins. I think you're going to have to be very careful, because I think an awful slew of them are just going to disappear. Ultimately, in the end, I don't think Bitcoin's going to disappear. And so, in the end, I think it's not going to really matter whether you guys have stacked gold or if you've hodled Bitcoin. I think you're both going to make out really well. It doesn't matter which side that you're on. I think that's my opinion on it anyway. And so for people out there who've got both, well, you're going to be sitting really pretty, I think, ultimately in the end. Thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the very next episode. Bye-bye.